Hey, what's going on, guys? This is Terrence Ray back at you with another stock market, or shall I say, another weekly stock market update. We're going to have an abbreviated week this week with the holiday being on Monday. So we only got 4 days of trading this week, which we still should see some volatility with the inauguration coming up on Monday. If you're just waking up this morning, you're probably seeing that your TikTok isn't working properly. So I imagine that's going to be a big deal. That's all over the news right now. That I think in can what CapCut, and I think I was told something else, some other companies as well, or other apps not working. But hey, we'll see what happens through the week. That could provide, um, even though we can't trade TikTok, we can trade other social media platforms like what Meta, Google, with being YouTube, Meta being with Instagram and Facebook, and maybe Snap, things like that. I think that these stocks will move, depending on whatever the president um, elect or will be Monday, President Trump decides to do with the TikTok ban. Will he? I think he can use an executive order to allow the reinstate the company or the app, whatever. So we'll see how that plays out. And I say all that to say this, right? Those are things that can move the market. I only care about stuff that can move the market. That can move the market. We have an expected move, a weekly expected move for the week of $78. I think when I looked at it on Friday, the expected move may have been like right around $74 or something like that. So right now it's showing $78. I put on a weekly butterfly. I actually put it on to the downside, on the put side. May not have been a good move. The market might just take off to the upside, but you never know, right? Only a little small $10 trade. So go back and watch the Friday video. You want to see what my rationale for buying a lottery ticket. Those weekly butterflies, that's what they are for the most part. Now, with this week, with the weekly expected move being $78 for 4 days of trading, that's a pretty good expected move. Last week it was like 104, but that was 5 full days. So that's why I said expect some fireworks this week. Now, initially, we could get a little pullback at the beginning of the week. Maybe Tuesday, Wednesday, maybe we get a pullback. We ended the day on Friday with a doji candle. We're gonna do some candlestick charting today. We got a doji, which means that sellers came in. That's how you got this wick here, and we had buyers here. So basically, they agreed to basically do nothing on Friday. Generally, when you get like a doji, I would expect the next trading day, which will be Tuesday. You could get a gap down, or you could get a gap higher. It's possible, right? Especially with the inauguration. Um, but I expect this to act um as resistance. Just me, especially with this jump off here. Maybe we'll get a little pullback. Now, let's go and look at a sector, an ETF sector of the S&P 500. Let's take a look at the financials. The financials, as we can see, had a nice, it looks similar to the S&P 500. So we had a gap up here, up day. So we had a big green candle here, a gap up, a huge gap up, then another green day, another green day. So you got like 5 straight green days in the financials. Is it possible for it to keep going? Yes, it is. I expect you got a little bit of resistance right here. So this also would lead me to think that, hey, we might see a little bit of chop right around this area, right where this doji is here, right? So if we get a little bit of something in the financials, I could be wrong, but then I'm just showing things that other charts that go with my thesis that hey, we may see a little slowdown on Tuesday, maybe Tuesday or Wednesday, right? Let's look at energy. Now, energy, this is the XLE. So these stocks will be energy stocks. The reason why I have these trend lines here, this is what you would call a V bottom. You may hear if you watching like stuff on CNBC or anything like that, you hear him talk about V bottoms. This is the technical definition of a V bottom. You can see where XLE, the energy sector, just took a straight dive from November all the way down to December. And then in December, it just came just almost all of it back. And we sitting right up here where I expect to see just a little bit of resistance. I expect to see some resistance right in this area where it chopped before. Right. So now I've already seen where in the XLF, which are your financials, your banks, I've shown where we could see some resistance in the chart. Now I'm showing you in the XLE, maybe another dollar or so up. We could see a little resistance there. And you can see over here, I look at XLF. This is on my main watch list, the XLF and the XLE. The market, from my experience, if the financials, which are your bank stocks, this is your JP Morgans, your Goldman Sachs, your Citi, your Bank of America, Wells Fargo, Morgan Stanley. If those stocks aren't going up, the market generally will not go up. I know they talk about the Mag 7, but you got to pay attention to the financials too. So with big moves in both of these coming up against resistance. Now let's look at XLU. These are your utilities. Now XLU chart, I could see it going up, even though we got a long wick here. I don't see it really. I got some resistance maybe right in this area right here. So it could go a little higher, but with this candlestick right here, I wouldn't be surprised to see a red candlestick on the next day. Just because these are good looking charts, especially when you have them gap up like this and you get this big green candle. A lot of times, what I'll be looking for is a pullback into this level right here, and that's a buying opportunity, in my opinion. I do think just with the momentum like of this presidency that we could see um like a continuation of this up move into the into this new year. So I see some resistance here, a little bit of resistance here, and then you can have some support right in here. Let's see. These are all places where I could see the market coming to and then making turns, right? So I only put those on there just to say, right, these are areas that if I'm looking at them, I'm looking at positions, where we could see some possible reversals in the market. And not like a reversal like the takeoff to the downside. I mean, if I'm looking at XLF, let's pull up something like saying that maybe the market slows down on Tuesday, maybe Wednesday, and then pulls into here and then takes off again. I do think that that we'll continue to go higher, in my opinion, especially in the only two sectors that were down on Friday was what XLV, which is healthcare, which has been down, right? You could look at it. This is a 6 month chart, so you can just see it's just been down. And then let's look at real estate as well. However, I do think that these particular sectors will take off again, in my opinion. I don't know about healthcare, but I expect real estate to at some point to take back off again, right? If the economy begins to do better. Um, what I did want to do, and I'll do this live, we'll run through a couple let's look at some energy stocks. Let's look at Chevron. Now you see Chevron. Now I had no intentions initially of looking at Chevron, but I wanted to bring it up. You see how this chart looks? This is would be another V bottom. But you see how Chevron looks. This is the energy sector. But when I come back to XLE, look at XLE. So this is the power of looking at it like a ETF, right? So you find an ETF, even if you don't want to trade XLE, which XLE is a great trading vehicle, in my opinion. It is very liquid. When we come over here and we look at let's just go to the February monthlies. Anytime you look over here and you see an open interest, you see thousands of contracts, you know that it's liquid. Now it doesn't have the expected move on here because they're updating this. You're going to see more. They're putting in half strikes for this particular monthly. Let's go to out to March. You see, if I go out to March, now look at all these thousands of contracts. This is a very liquid underline. You can trade XLE. Like you can come in here and trade options. You can come here and buy stock. It's very liquid. So, but if you didn't want to trade XLE, you can trade Chevron. Chevron is very liquid. You see, come over to open interest. We see thousands of contracts over here in open interest, right? That's letting you know that it is liquid. You want to see thousands of contracts being traded on the option chain when you come look at a stock. Look over here. We go out in March. Look at all these K's, right? That letting you know that is liquid. Also on the Tasty Trade platform, you can click on overview and you see it says 4 stars over here for CVX. So we can trade that. I just wanted to show you that when you come to a sector and you see a sector with a nice trading range, you can also come and then find stocks in that sector that's moving similar to that sector. So if you didn't want to trade the ETF, you can come in here and trade Chevron and you can find other stocks just like that. Now, that's going to do it for the weekly outlook part. So basically, just to recap, I do see us maybe coming into some areas where we could, when you got big moves like this, we should see a slowdown. Now, I could be wrong, but we should see a little chop maybe on Tuesday, maybe Wednesday. And then maybe the market would give us a buying opportunity. I would like to see that. It's possible for it to gap up off the inauguration, just keep going. I would like to see, me, I want to see a little pullback. And then any little pullback for me is an opportunity to get long. Because if you look at this now, let's look at this on the weekly. I just glanced over there. Just look at this candlestick on the weekly. That's a big candlestick. So we may get a pullback, we may not, guys. It might just blow through there and keep going. Overall, I am bullish on the market. I expect the market to continue to go higher unless we get some type of news or some type of big event to turn it. Now, let's get to the educational part of the video. Last week I did a segment to beginner segment on options, and I talked about buying calls and puts. In this particular segment, we are going to talk about selling calls and puts, right? So we're going to use the SPY. We'll come to the monthlies. Now, just to recap, if you would like to buy a call, you will come over here on the call side where it says ask. Right up here in a parentheses, you see buy. You click on anywhere on this buy side and you would buy a call. And it's saying, and it right here says B1 and it's in green. That's letting you know you are buying the call. And you pick, I'm not going over in particular which ones to buy, but you can see when you click on one that you want to buy, the price will pop up down here and it's letting you know you're going to pay this 7.52, which would be $752 for this call option. And this contract would expire in 33 days. Now, same thing on the put side. If you wanted to buy a put, you would come over here somewhere on the right side and you would click to buy that put. and you will see how much you would pay for it. And you're depending on which one you want to buy, depending on how much it costs, right? We will go over deltas and things like that in another video, just going over basics right now. Now, once again, if you want to sell, yes, you can sell a call. Buying a call is a bullish strategy, meaning you want the market to go up. But if we were to sell a call, we would come over here where it says bid, and you see it says sell in parentheses, and we would click somewhere there. Now you see that it goes red. That's letting you know you are selling, and it has an S right here. One, we're selling one contract. We're selling the 22 Delta at the 616 strike right here in the middle where it says strike. Now, when you're selling that call, when I sell options or buy options, I use Delta to pick which one I buy. I don't necessarily pay attention to the strike too much, but you can do it either way. But you will go here, anywhere there. Now, the difference is when you click on the buy, right? When you click on the buy, you're going to pay 260 for this particular option. But when I click on the ask, or excuse me, the bid or to sell this particular strike, I'm collecting 260 in premium. The difference is buying something is a debit. That money you're paying for it. That is the most that you can lose on that trade, what you pay for the option. When you sell this option, you're taking in premium, right? And as you can see, you can lose more. The buying power effect is 10 grand for this particular. So they're going to margin your account $10,000. Your max profit is 260. Now, with your max profit being 260, you're saying, why would someone want to sell an option? I'm going to tell you that in another video, but I just want to get over the basics of the option chain and keep it bite sized. Selling a call is bearish. We want the market to go down. As thus you see right here on the option chain, it is green right here. That's letting you know that you make your money as long as the market stays in this range. You lose your money when it comes back here. Now, if we go to the right side of the option chain and we want to sell a put, we go somewhere over here, we hit the bid, and we are selling a put. And we are taking in $374 in premium. We're selling this put. This is a bullish strategy. When you buy a put, that is a bearish strategy. You want the market to go down when you buy a put. When you sell a put, you want the market to go up and stay above the strike that you have sold. Or it can stay sideways. When you sell options, it doesn't necessarily mean that it has to move, because the market can just stay sideways as long as it doesn't come down below 579. You get to keep this premium that you collected. Same on the call side. When you collect this premium, it's like taking in the 374. As long as the market oscillates sideways within the next 33 days, you can keep this 374. So those are the major differences and between buying and selling. Once again, buying a put is bearish. You want the market to go down. Selling a put is bullish. You want the market to go up or stay neutral. All right, guys. This will be the second episode of, you know, basically a beginners section for options and how to trade options and what they are. And I'm just gonna go. So on this video, we talked about selling options. The first video was just buying. Then I will do another video where we'll put them together, and then we'll talk about spreads and stuff like that. So hit the like button, hit the subscribe button. Let me know If you got something out of it, let me know how you understood this. Or if you didn't, if it's something else I need to emphasize and go over, I will. With that being said, guys, I'm going to be out. Peace.